Hi, I'm Dr. Druv and welcome to my YouTube channel. This is a channel not on medicine, but all the other aspects needed to live our medicine lives. Today we're going to be talking about universal life insurance, which is a subcategory of permanent insurance. Similar to the previous episodes, we understand the importance of protecting our loved ones and ensuring their financial security, and so that's why it's important for us to use life insurance, and this is one product available to us. Universal life insurance is a type of permanent life insurance that offers flexible premium payments, adjustable death benefits, and a cash value component. But if I were to boil it down, essentially similar to the permanent insurance category, there's a life insurance component that you pay premiums for, but they're adjustable, unlike whole life, which stays level. And the cash value component grows over time, but you have control over what investments can go into that cash value component, as opposed to the cash value component being invested by the insurance company on your behalf in order to grow it and to grow your death benefit. Universal life insurance offers flexible premium payments, adjustable death benefits, and a cash value component which accumulates tax deferred over time, providing an additional source of income in the future through another strategy close to retirement. It also offers more flexibility than your traditional whole life, which is good or bad depending on how you want to look at it, as it allows policyholders to make those adjustments, as we talked about. So why is this important? Well, as a high-income earner, you're going to be pitched lots of products, everything from term insurance to whole life insurance to universal life insurance. And so hopefully these videos serve as a way for you to understand the various components. So in the case of universal life insurance, it is still life insurance. It does the same thing, protecting our families and their lifestyles in the case of our untimely death, as we have a set of financial obligations and responsibilities, as well as a high debt burden. So we need the life insurance component, and so the premiums go in to pay for that. And the cash value component, because it's permanent insurance, is invested based on our investment decisions, and the interest essentially credited comes back into this bucket called universal life bucket. And obviously there are some holes in the bucket, as it does cost money. So there's a cost of insurance to provide that life insurance, and some expenses go in order to make those investments or to provide your insurance product. So there's a lot more moving parts in universal life insurance. So while it gives you flexibility and maybe control than a traditional whole life insurance policy, sometimes that may not be right for the right investor. And so how does one go about buying universal life insurance? Is similar to whole life insurance policy. The number of advisors out there who truly are experts are small. You need to go find them. You need to research, educate yourself, compare the different options available from various insurance providers, and find the product and the advisor and your philosophy and your values all lining up in this universal life bucket. It's the concepts of life insurance are the same. How much money are you willing to spend for your premiums? How much death benefit do you want to maintain your family's lifestyle? But the cash value component gets complex with the type of investments that you could pick, everything from your stock market down to real estate and so on. I would look at these illustrations and not go by the dividend scale interest rate, which is the interest rate taken in order to show the growth of your cash value component on these illustrations. Again, in future videos, I'll have an example of an illustration, but I can emphasize how important it is to not not take those cash value numbers as guaranteed. None of these are guaranteed. Read the policy statements word for word. Read these documents. It's very important that you understand them. Have a very frank discussion with your advisor before you go down this path, as there's significant consequences to cancellation of these policies. And insurance companies, despite having 100 years of experience or even more with insurance products, this particular product came out in the 80s, and there have been lawsuits in the US associated with these universal life policies. Wow, that's already 5 minutes. There have been lawsuits with these universal life policies in the US, and I don't think one physician can manage all these moving parts. Sometimes it may be better to just take term insurance and invest the difference. But on that note, in conclusion, universal life insurance is a type of permanent life insurance that offers flexible premium payments, adjustable death benefits, and a cash value component that's under your control. And it's perfect for an investment savvy physician investor who is very knowledgeable, very sophisticated, and needs a little bit more effort than whole life insurance. But hopefully this has been of value to you. A few action items. If you like the exact frameworks used by affluent physicians to take back control of their time and money, check out the link in the description below. I make these videos because my mission is to help fight burnout in 10,000 physicians across this world, because I wish that someone was there holding my hand in this wealth building journey. Come and join my free Facebook group of like-minded physicians with resources and cheat sheets and everything in between to live our medicine lives. Thank you for listening. Thank you for doing what you're doing, and I'll see you in the next episode.